I'm staring at a spreadsheet that's making my heart sink, because I just realized my friend has been paying $1,031 every month for the past 5 years on her student loan, and she still owes $53,219. The worst part is, she's been paying more than the minimum, but the interest is so high that it's barely making a dent. You're probably in a similar situation, feeling like you're throwing money at your debt without making any progress. You're not alone, millions of people are struggling with student loan debt, and it's not just the amount that's the problem, it's the fact that the system is designed to keep you in debt for as long as possible. By the end of this video, you'll know about a little-known student loan repayment plan that can save you thousands of dollars in interest and help you pay off your debt faster. It's called the Income-Contingent Repayment Plan, and it's available to anyone with a federal student loan. My friend, let's call her Emily, was making $51,340 a year as a teacher, and she had $67,391 in student loan debt. She was paying $1,031 every month, but she was barely making any progress. That's when she discovered the Income Contingent Repayment Plan, which allowed her to lower her monthly payments to $423 and save $608 every month. Over the course of 5 years, that's a savings of $36,480. The Income Contingent Repayment Plan works by capping your monthly payments at 20% of your discretionary income. Discretionary income is the amount of money you have left over after paying for necessities like rent, food, and utilities. For example, if you make $51,340 a year, and you have $2,500 in monthly expenses, your discretionary income would be $1,500. Under the Income Contingent Repayment Plan, your monthly payment would be $300, which is 20% of your discretionary income. Now, I know what you're thinking, this all sounds too good to be true. But trust me, it's not. The Income Contingent Repayment Plan is a real program, and it's available to anyone with a federal student loan. The problem is, most people don't know about it, because the government doesn't do a great job of advertising it. So, how do you sign up for the Income Contingent Repayment Plan? It's actually pretty simple. You just need to log into your student loan account and click on the Repayment Plans tab. From there, you can apply for the Income Contingent Repayment Plan and see if you're eligible. But here's the thing, the Income Contingent Repayment Plan is just one part of a larger strategy for paying off your student loan debt. You also need to make sure you're taking advantage of other programs, like the Public Service Loan Forgiveness Program, which can forgive up to $70,000 of your debt after 10 years of qualifying payments. And if you're really struggling to make your payments, you may want to consider consolidating your loans or refinancing them with a private lender. Just be careful, because consolidating or refinancing can sometimes lead to higher interest rates or longer repayment terms. For example, let's say you have two student loans, one with an interest rate of 6% and the other with an interest rate of 4%. If you consolidate the two loans, you may end up with a single loan that has an interest rate of 5%. That may not seem like a big deal, but over the course of 10 years, it can add up to thousands of dollars in extra interest. So, what's the best way to pay off your student loan debt? It's not just about making the minimum payments every month, it's about having a strategy and taking advantage of every program and resource available to you. If you're struggling to pay off your student loan debt, I want you to know that you're not alone. Millions of people are in the same situation, and there are programs and resources available to help. So, don't give up, keep fighting, and know that you can pay off your debt and start building the life you want. And if you know someone who's struggling with student loan debt, send them this video. They may not know about the Income Contingent Repayment Plan or the Public Service Loan Forgiveness Program, and it could make all the difference for them. In our next video, we'll be talking about the best ways to invest your money and how to start building wealth, even on a limited income. It's called The Beginner's Guide to Investing, and it's going to be a game changer for anyone who's just starting out. So, hit like if you found this video helpful, and don't forget to subscribe for more videos on personal finance and money management. Thanks for watching, and we'll see you in the next video. Let's take a closer look at how the Income Contingent Repayment Plan can help you save money in the long run. For instance, if you have a student loan with an interest rate of 7% and a balance of $50,000, your monthly payment under the standard repayment plan would be around $563. However, if you switch to the Income Contingent Repayment Plan, your monthly payment could be as low as $200, depending on your income and family size. Over the course of 20 years, that's a savings of over $22,000 in interest payments alone. Another example is a borrower who has a student loan with an interest rate of 6.8% and a balance of $30,000. Under the standard repayment plan, their monthly payment would be around $345. But if they switch to the Income Contingent Repayment Plan, their monthly payment could be as low as $120, depending on their income and family size. Over the course of 10 years, that's a savings of over $10,000 in interest payments. It's also important to note that the Income Contingent Repayment Plan can help you avoid defaulting on your student loan. Defaulting on a student loan can have serious consequences, including damage to your credit score, wage garnishment, and even tax refund offsets. By switching to the Income Contingent Repayment Plan, you can make affordable monthly payments and avoid defaulting on your loan. In addition to the Income Contingent Repayment Plan, there are other programs available to help you manage your student loan debt. For example, the Pay-As-You-Earn Repayment Plan allows you to make monthly payments that are capped at 10% of your discretionary income. This plan is available to borrowers who have loans issued after October 2007 and who are experiencing financial hardship. Another program is the Revised Pay-As-You-Earn Repayment Plan, which allows you to make monthly payments that are capped at 10% or 5% of your discretionary income, depending on when you borrowed your loans. This plan is available to borrowers who have loans issued before October 2007 and who are experiencing financial hardship. It's also worth noting that some employers offer student loan repayment assistance as a benefit to their employees. This can be a great way to get help paying off your student loans, especially if you're working in a field that is in high demand. For example, some employers may offer to pay up to $10,000 per year towards your student loans, which can be a huge help in paying off your debt. Furthermore, some states also offer student loan forgiveness programs for borrowers who work in certain fields, such as teaching or healthcare. For example, the Teacher Loan Forgiveness Program offers up to $17,500 in loan forgiveness for teachers who work in low-income schools. Similarly, the Public Service Loan Forgiveness Program offers up to $70,000 in loan forgiveness for borrowers who work in public service jobs. In terms of the impact of student loan debt on the economy, it's estimated that the total outstanding student loan debt in the U.S. is over $1.7 trillion. This debt can have a significant impact on the economy, as it can prevent borrowers from buying homes, starting businesses, and investing in their communities. By providing programs like the Income Contingent Repayment Plan and the Public Service Loan Forgiveness Program, the government can help borrowers manage their debt and stimulate economic growth. It's also worth noting that student loan debt can have a disproportionate impact on certain groups, such as low-income borrowers and borrowers of color. These groups may face higher interest rates, fewer repayment options, and less access to financial resources, making it even harder for them to pay off their debt. By providing more resources and support to these groups, we can help level the playing field and ensure that everyone has an equal opportunity to succeed. In conclusion, the Income Contingent Repayment Plan is just one part of a larger strategy for managing student loan debt. By taking advantage of this plan, as well as other programs and resources, borrowers can save money, avoid default, and achieve financial stability. Whether you're a recent graduate or a seasoned borrower, it's never too late to take control of your student loan debt and start building a brighter financial future. The key is to be proactive and to explore all of your options. Don't be afraid to reach out to your loan servicer, to ask questions, and to seek help when you need it. With the right strategy and the right support, you can overcome the challenges of student loan debt and achieve your long-term financial goals. For example, let's say you have a student loan with a balance of $40,000 and an interest rate of 6%. Under the standard repayment plan, your monthly payment would be around $450. But if you switch to the income-contingent repayment plan, your monthly payment could be as low as $150, depending on your income and family size. Over the course of 15 years, that's a savings of over $15,000 in interest payments. Additionally, some lenders offer interest rate reductions for borrowers who make timely payments or who have a good credit score. For instance, if you have a student loan with an interest rate of 7% and you make 36 consecutive on-time payments, your lender may reduce your interest rate to 6.5%. This can save you thousands of dollars in interest payments over the life of the loan. It's also important to consider the impact of student loan debt on your credit score. Missing payments or defaulting on your loan can significantly lower your credit score, making it harder to get approved for credit cards, mortgages, or other loans in the future. By making timely payments and keeping your debt under control, you can maintain a good credit score and avoid these negative consequences. In terms of the benefits of the income-contingent repayment plan, it's not just about saving money on your monthly payments. It's also about having peace of mind and